Today we will drop in on Alimentation Couche-Tard and find out why they may be a very convenient investment, and we will begin right now. Alimentation Couche-Tard has been making the headlines lately, and I've been hearing their name enough that we need to take a deeper look at them. They are operators of convenience stores on an international scale. As of April 2022, they had 12,166 stores that operate under Couche-Tard, Circle K, Holiday, Ingo, and Max. They sell everything from lotto tickets and tobacco to snack foods, alcohol, fuel, and fresh food offerings. Most of us are aware that convenience stores have a higher markup than traditional grocery chains, and they can do that as people are always willing to pay a little extra for convenience. If you just need a carton of milk, why are you driving all the way into the grocery store when you can just grab it at the convenience store? Sure, you end up leaving with milk, some potato chips, maybe a Coke, and a pack of gum. All marked up profits that kind of suck for a consumer, but are awesome for an investor of ATD. However, with the price of gas, it can often be cheaper to buy that milk at the convenience store opposed to driving all the way to the market. That is a win-win for both you and Couche-Tard. Before we pick up some overpriced snacks, let me know in the comments if you hold any Alimentation Couche-Tard. I currently do not hold them, but maybe that will change after this video. As always, I am very grateful to see all of you here in the home of free financial content on YouTube. If you are new, please subscribe right now so you won't miss a single moment, and a huge thank you for that click. Alimentation Couche-Tard was founded back in 1984 and is headquartered in Laval, Quebec. They started in Laval as a single store, and by the year 2000, they had bought the Bigfoot convenience chain in the US, and a few years later, they acquired Circle K. By 2012, they had expanded into Europe, and it's all history from there. They have demonstrated that they know how to grow and acquire new assets. In 2021, Forbes magazine named Couche-Tard to their list of world's best employers. However, being a great place to work does not tell me if they are a good investment. Maybe they are, or maybe they are a hot mess. We will only know which once we jump into the numbers. We will begin, as always, with some surface data. So their market cap is $60.1 billion, making them a large cap company. That makes sense, as we did establish that they are kind of everywhere. Their beta comes in at 0.99, which means they are pretty much in line with the market average in terms of volatility. Their earnings per share comes in at 5.18, and they really do not have any concerns with dilution. As for those earnings, they have grown by 14.6% per year over their last 5 years, which is really not too shabby. We are definitely off to a good start. Their price to earnings ratio comes in at 16.60, which is slightly lower than the industry average of 17.10. They are close enough that I have really no concerns over it at all. They have a price to book ratio of 3.70, so that means they are trading 3.7 times over their book value. That is a little high, but not unusual in a company that grows as much as they do. You have to remember that their PE ratio is telling us they are a fair value compared to their industry. You have to remember that their PE ratio is telling us they are perhaps a little more of a fair value compared to the rest of the industry. So what should they be priced at? Simply Wall.st has their fair price valued at $109.91. Now, this is a number that they came up with via a discounted cash flow model. I find their valuations are a little more liberal with the numbers than I like, but if they are right, that could be a good thing for investors of Couche-Tard. If we get into returns, Alimentation Couche-Tard is 99.993% a growth play. They do have a dividend, but it is a wee bit on the small side, coming in with a yield of 0.74%. That itty-bitty divvy is paid out quarterly in the amount of 11 cents per share. In terms of growth, they enter 2021 with a share price of $42.65, and they grew that to $53.97 by the year's end. This translates into a return of investment of 26.5%. That's okay. So far this year, they have risen to $58.79, and that is an ROI of 8.9%, which is really not that bad in a bear market. The bottom line is that you have some pretty half-decent growth returns on this stock. Okay, it is time to look at their debt. From their balance sheet, we have a debt of $5.9 billion compared to their equity, which comes in at $12.4 billion. That means their debt to equity ratio is 47.7%, which is really not bad at all, especially if you consider that it used to be 118.8% just 5 years ago. They have demonstrated very well that they can manage debt. Their financial situation is ideal in that they have more than adequate earnings to cover their debt's interest payments. Their debt situation is absolutely beautiful, and I have no concerns there at all. So, what is the final verdict? I asked if there was a chance that Alimentation Couche-Tard could be a hot mess. And it turns out that they are far away from being a hot mess. Their fundamentals are good, and the fair value of $109.91 looks more valid than I originally thought it to be. They are not getting there anytime soon, but they more than likely will within 5 years. This is a company that has proven themselves in a bear market, and I suspect they will be fine in the coming recession. They look like a safe, solid growth play. I said earlier that I don't have any of their stock, but I may just have to slide a few into my RRSP. This is a stock I like more after the deep dive than I did before. If you like your growth stocks, this is one you want to break out your due diligence on. The fun does not have to end here, because you can always watch my video on hydrogen that I have linked on the left, or you can check out the video on the right that YouTube thinks you will like more. Your click will decide who is right, and I will see you in the next video.